Hi everyone. Today let's talk about the government possibly shutting down once again. Then we'll look at the economic data. Then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the government might be shutting down once again. For those of you that don't know, the federal fiscal year rolls over on 1 October, and due to that, they have to pass a funding bill by 30 September in order to avoid a federal shutdown, meaning that all the non-essential parts of the government stop operating this weekend, potentially. They say the last 3 shutdowns cost the taxpayers $3.7 billion in back pay to federal workers. This is money that would have been spent anyway, but of course the government does not get the work out of this money. They just end up paying it out when the new budget is passed. And this is coming on the back of the last budget hike with basically no limit on the federal debt. You can see we topped $30 trillion. I think we actually ended up topping $33 trillion this month for the first time, which is a bananas amount of money. In terms of the markets, if we do see a government shutdown, that could create a little bit of instability, which could affect markets in the short term. I don't think there's really a long-term effect here, not the same way that we were facing a default on the federal debt. That would obviously have massive financial implications, but this is not quite the same thing. The government's going to continue to spend money, and then once they pass a budget, all of the back pay will get paid out. Moving over to the economic calendar for tomorrow, there was nothing important here today. But for tomorrow, we do have consumer confidence at 10 o'clock. That could be interesting. New home sales also at 10 o'clock. That's basically all for tomorrow. Building permits, fairly interesting at 8 o'clock. And then for Wednesday morning, we do have core durable goods at 8:30. That could be interesting. So understand if you hold anything overnight, it's going to be affected at 8:30 Eastern, 1 hour prior to market open, so you won't be able to affect those positions. Moving over to the charts, it was a pretty uneventful day. We talked about on the Sunday video how we might come down and touch that 144 EMA. Certainly seems possible. We did make a new low on the gap down, but then we showed a little bit of strength into the mid-session, ended up showing a little bit of a bullish day, 0.42%. Didn't fully engulf the previous candle, but we did get above this level here at 431.71. If that level holds in tomorrow's session, that could be an interesting level to trade off of. Of course, you're going to be fighting that 55 EMA here on the 1 hour chart. Momentum starting to fade. So if these start to break down, we take out this previous low from today, then you could be looking for a push to that 144 EMA. And then below that on the daily chart, you got the 200 sitting at 418.30. Obviously, still a very strong downtrend, well below all of the short-term EMAs here on the daily chart. Looking for that true mean reversion, strong bearish momentum, strong bearish RSI on the daily chart, but a little bit of strength, like I said, in the shorter time frames. Moving over to the NASDAQ, very similar thesis. Took out the lows, rallied up, hitting that 55 EMA on the hourly chart, starting to break down a little bit from that level. Again, watching that 360.44 level. We didn't get above it in this session, but if we break and hold, could be looking for a nice little retracement. You have a midpoint here, so you have a low, slightly lower low with RSI showing some strength, clear divergence on RSI versus price. So looking for a nice little bullish move in tomorrow's session. Again, it needs to hold these levels. Highly traded zone at 358.68 on the hourly chart. Daily chart, also a bullish candle. Again, not quite engulfing, so it's not super bullish. Momentum still bearish, RSI still bearish on the daily chart. Moving over to the Russell and the Dow, obviously these structures are still very bearish, but just like everything else, if we zoom in here a little bit, you can see we hit this level at 175.96, ended up holding there, and then showed a little bit of strength. Little bit of bullish momentum on the 4 hour chart. In terms of patterns, still watching this head and shoulders, big breakdown. You're expecting this to go a little bit lower. Doesn't mean we can't retrace, hit trend, and then break down further. Similarly here on the Dow, continuing to break down, just a slight pullback off this 339.11 level. Next one below that here is going to be 335.91. Momentum still ticking a little bit more bullish. RSI showing a little bit of strength, just like the other indices, but obviously no change to trend. Moving over to Apple and Tesla. Apple showed a little bit of strength, just like everything else. Got the 55 EMA here on the 4-hour chart acting as resistance at 177.03. We're right below my level at 176.15, also interesting. This really needs to break down and take out these previous lows if it's going to do so. Otherwise, it needs to hold above the 55, break out a little bit, pull back, test support, and then rally from there if it's going to do it. Right now, basically no change to the structure on Apple. Tesla, still a very bearish structure, slight pullback, very similar to the Russell and the Dow. Moving over to consumer staples and consumer discretionary. Staples throwing a big wick to the downside. Momentum ticking a little bit higher. Again, looking for just a shorter term pullback in my opinion. Discretionaries doing exactly what Tesla did, pulling back slightly. Just below my level at 162. If this breaks, maybe we look for a retest of the 21 at 165.52. That could be interesting. If this resistance holds, then you're looking for a bigger move down to 158.03. That would be interesting as well. Momentum showing that it's going to tick more towards bullish, so you do have to respect that. The question is, how big is this going to pull back? And will it be big enough to change the structure? Moving over to energy just for a moment. I have energy here on the left and oil and gas on the right. Both of these turned in a pretty big bullish day, 1.25 on energy and 1.84 on oil and gas. Oil and gas bouncing off of that 55 EMA, energy holding at these previous highs. Overall momentum on both of these looks like it's ticking back towards the bullish side. It's been on a run, so this looks like a shorter term pullback here, potentially looking for a bit of a rally. Overall, these were the two best performing sectors, and it does look like they need a little bit of attention going into tomorrow. Moving over to breadth on the 20-day and the 50-day average. I just wanted to show the 20-day here. You can see we got to these previous lows around the 16 area. We're showing a little bit of strength at that level. RSI showing some clear divergence. Slightly higher low here on the 20-day average. Similarly here on the 50-day average, super low breadth reading going back to the end of August. Much lower prices, higher RSI read. Does seem like we're on the verge of a potential pullback. Again, the question is, how much of a pullback are we going to get? Clearly showing a little bit of strength on the 20-day average. 50-day average, you still want to see a little bit more confirmation in my opinion. Moving over to yields. 2-year yield, slightly bullish day, but nothing crazy. 10-year yield going absolutely bananas on the day. 2.28% on yield. Big bullish day, big momentum, big RSI. You can still see a little bit of divergence here, but the strength is off the charts, continuing to make new highs. Most people are expecting that this is going to start to push towards that 5% area, at least 4 3/4 now that we got the new information from the Fed, and that is now getting priced into the bond market. Moving over to the dollar here on the hour and the daily chart. Very similar thesis to yields. You can see the dollar making a massive push to the upside. Big bullish day, continuing to break out and look even stronger. We're not quite at trend, so this could go a little bit higher before we see any kind of pullback. Momentum bullish, RSI still bullish, very strong trend, and nothing on the dollar really has changed. Moving over to TLT on the 1 month view, I really have to zoom out here to show you the levels that we're at. Massive down month, down 7.72%. You can see we're at prices that we saw here in February of 2010, before we saw a pretty steady incline of prices because yields were going down. Yields are now going higher than they have in a while. And we're seeing TLT break down pretty dramatic back into these prices, going all the way back to October of 2002. So interesting level here for TLT, obviously very exposed to those longer term bonds, but massive breakdown, and it continues to make new lows. Moving over to the volatility indices, obviously bond volatility going much higher based on the chart that we just looked at. Strong push on the day. VIX threw a wick to the upside, hit that 200-day moving average. We talked about that on the Friday video from last week. Broke down a little bit from that level. Still bullish momentum, still bullish RSI. And so you have to respect that. Certainly could go higher, but it did show a little bit of weakness at these previous tops. Definitely interesting area here. If it holds right at this trend, breaks higher, that could be interesting. If this level breaks down and it holds, pushing back towards 14, that could be interesting as well, showing that this little short-term down move is just about done in my opinion. Of course, that'll be something that I'm watching for in tomorrow's session. Moving over to my positions, I did not do much at all today. All I did was roll out my calls at the end of the day. Didn't change my strikes, just rolled it out in time, collected about another $1.40 in credit. They're showing a little bit of a loss here because the market's rallied right at the end of the day. We saw that on the charts. So this is not a real loss. My actual max profit to the upside is 360.44. You can see we're trading right now about $1 below that. So if we end up holding that rally, I'll get that money back and then plus a little bit more on those calls. And I'm not opposed to rolling these out and up tomorrow, depending on the price action that we see. Like I said, there's a little bit of potential for some bullishness despite the big down moves that we saw at the end of last week. But again, I would like to see a little bit of confirmation. I would like to see some of those resistance levels start to break. That should give us some confidence to the upside, in my opinion. Let me know down in the comment section if you think we're going to get a government shutdown, and what will the impacts be on the markets if that does happen. Could be interesting, definitely something to watch. Like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.